And a very happy Monday to you at 12:07 in the West. It's the John Phillips Show. Mr. Randy Wang's in Culver City.
John, I've decided that this drop from Henry Lee on KTVU is universal. Are you ready?
I'm ready.
It's happened yet again.
Oakland Unified is broke. Not to confuse you from 6 months ago when
It's happened yet again.
Oakland Unified was broke.
Didn't we do a story on their financial problems where everyone at the city, or everyone at the school district, I guess I should say, the board, the union, everyone, all the stakeholders, they all said, oh no, we're on firm financial footing, and anyone who says otherwise is a liar.
It's happened yet again.
They're broke.
What do you know? They don't know what they're talking about.
They just got out of a receivership and might be going right back into a receivership because Oakland gotta Oakland.
And another apple for the teacher. 800-222-5222 is the telephone number, 1-800-222-5222. A big thanks to the Union Rescue Mission and the Universal Hilton for hosting us on Friday's show. We had great weather, Randy, and oh boy, was it entertaining watching people go down the side of the building.
Well, especially because you didn't have to do it.
That's right.
But we had
And again, I'll point out our health insurance isn't that good.
It used to be better, but after COVID, SAG-AFTRA got real cheap.
Let me tell you what our health insurance would do about this. Let's just say there was something unfortunate that happened and I was lying on the pavement in pain. Instead of saying, could someone call a doctor? The after SAG health insurance person would be there saying, could someone call a chiropractor? 800-222-5222 is the telephone number, 1-800-222-5222. Well, we've spent a lot of time on this program talking about the insurance crisis here in the state of California and our inept insurance commissioner, Ricardo Lara.
You mean this guy?
I may be criticized and dragged through the mud for it and get my wig snatched, as the gay guys say.
Oh, yes. Kitty Glitter's biggest fan. Well, now he says, stop worrying about the insurance crisis. He has it all under control, and the prices are going to be dropping like stones.
There's a renewed interest in what's going on in California's insurance market because when Gavin Newsom went to New York last week to go to the Clinton conference and then a New York Times climate conference, he claimed that, hey, our policies are working. 5 insurers are coming back to California, to which consumer advocates looked at the numbers and said, wait, those 5 insurers never said they were leaving.
And this is what you can get away with in a one-party state. You can just make these claims, and they get written about in the national papers. So the people in Iowa and New Hampshire and South Carolina think you've got the situation under control. Meanwhile, none of us can buy insurance.
Well, here is some good news. California has a brand new statewide political program, and it is hosted by our friend Ashley Zavala, who is now the political director for KCRA3. She has a show on Sunday mornings, and they post the clips on their YouTube channel. And what do you know? She did something that very few people are ever able to do, get Ricardo Lara to agree to an interview on Zoom.
I wonder how she was able to swing that. Did she do the interview from a luxury hotel in Bermuda?
Let's go ahead and listen to California Politics 360 with Ashley Zavala.
Governor Gavin Newsom announced this week that a handful of insurance companies will come back or...
None of the ones that you know.
I would like to know what the list of insurance companies he was claiming were coming back to the California market.
One of them was called Casualty, and I'm not really sure what they do.
What is the other one? Bob's Fish and Chips / insurance?
But you would figure Casualty, that sounds like a very specific kind of insurance.
Yeah, who are their customers? The Crips or the Bloods?
continue writing homeowners policies in California. It comes as families have been grappling with high insurance costs, losing coverage altogether, or forced to use the California Fair Plan, which,
by the way, has been going up and up and up this year in usage, even though Ricardo Lara claims his plans are supposed to get people off the Fair Plan.
I'm telling you, anytime I find out someone in my orbit bought a house recently, I always ask the question, who is your insurer? And I'm going out on a limb here, but I would say that at least half of them now say the California Fair Plan.
And what's interesting about that is while you might just assume that the only place with Fair Plan policies would be these wildfire-prone areas, 55% of Fair Plan policies are written in low wildfire risk areas.
Yes, if you have a condo in the flats of Los Angeles, the only risk you have of your place burning down is if the Lakers win another world championship.
Which is the state's insurance of last resort. The insurance crisis magnified when 3 of the largest companies paused or stopped writing policies. In 2021, Allstate quietly paused new policies.
I guess we're not in your hands.
Quietly? What are you talking about? It was in every paper in the nation.
In May of 2023, State Farm made a similar move.
Not like a good neighbor.
Nope, that's my company.
A year later, they did not renew 30,000 existing policies, leaving families in limbo, and Farmers Insurance began limiting new policies in July of 2023.
That's my insurer, and they jacked up my rates this year.
We're all winning, as you can tell.
In fact, they jacked up my rates last year as well. I have only owned this house for 5 years, and the home insurance in that time has doubled. It was like $1,700 when I first got the house, and now it's over $3,000.
Mine has gone up the maximum amount they're allowed to raise it every time in recent years.
The California Department of Insurance said those 3 companies accounted for nearly half of all the policies written in the state. And they were not alone. A total of 7 of the 12 largest insurance companies by market share either paused or restricted new policies in California during this time. Since then, state leaders worked to change state insurance regulations to lure those companies back. Those regulations took effect late last year. The new rules allow insurance companies to consider new factors when they set premiums. That includes the likelihood of a catastrophe.
With their own modeling that they won't show us, but they swear it says that your house is going to burn down.
Think about that for a minute. In junior high, if you were given a math question by your teacher and you got the correct answer, but you didn't show your work, they would mark it wrong. Now, they can base your rates based on modeling where they don't have to show their work.
And the cost companies pay to insure themselves. In exchange,
the whole fact that insurance companies have insurance makes this whole thing sound like a house of cards.
Yeah, it's basically a Ponzi scheme.
And the cost companies pay to insure themselves. In exchange, the companies have promised to provide more coverage in high wildfire risk parts of California.
But again, the majority of those Fair Plan policies where it's the insurer of last resort are actually being written in non-wildfire risk areas.
And let's also be honest here. The majority of the population in California are in the population centers. LA, San Francisco, San Jose, San Diego. You get the idea. There are people who live in rural areas where they're at extreme fire risk, and I'm very thankful that those people will be able to buy insurance policies. But in exchange for that, and it's not even clear that those people are being offered policies by blue chip companies, but let's just say that it is. In exchange for that, we're giving away the keys to the kingdom to raise the rates dramatically on people who own property in areas where there's essentially zero fire risk.
The reforms we've just put into place allow for more rapid rate increases.
Wait, you're saying that like it's a good thing?
Thanks, Gavin.
And that's the pressure point now as we move from about average to below average in our rates. We're now starting to see those tick up. But the benefit of that now, part of the strategy, is a requirement to come into California market and also to insure in what we refer to as the WUI, which is the wildland and urban interface, and to cover 85% of the WUI in.
Actually, the fine print, according to the fine reporting at ABC7, is that it really is just 5% increase. They get their rate increases if they write 5% more policies in those areas.
This issue is just like crime, where they say the stats say that crime is going down. And you say, okay, why is it that the lead story on my local newscast every night is some crime story that's totally ridiculous? And then the next day they find a way to trump it, and then they trump it the next day, and so on and so forth. Why is it, if all of these companies are coming back to California and everyone can buy insurance now because of the great things Gavin Newsom is doing, why is it that in my own personal life, the people I know who are buying and selling properties, half of them are ending up on the FAIR plan?
In return for those rate increases.
California Insurance Commissioner Ricardo Lara joins us now from Los Angeles. Mr. Commissioner, thank you for making time.
Thank you. It's good to be here.
He has your old laptop.
I think he does.
Thank you. It's good to be here.
We know 5 companies have now committed to.
So I guess in all the kickbacks that he's gotten over the years, no one ever got him a new MacBook.
Yeah, why is it that Apple didn't need anything from that office?
We know 5 companies have now committed to California. Has there been any progress with others, especially those major insurers like Allstate, State Farm, and Farmers?
Yeah, we're absolutely.
There's your first.
Okay, Shane, can you help him out?
Absolutely.
Let's just remember to write down how many times Ricardo Lara says the phrase that pays in this interview.
Yeah, we're absolutely. Talking to all of them. Stay tuned. We expect more.
Stay tuned. You're almost out of office.
And he's not running for higher office either.
He is out because he got his wig snatched.
Stay tuned. We expect more to file rate files under the new sustainable insurance strategy of ours. So we're continually having these conversations. So we expect more in the next coming weeks and months.
Maybe it's a strategy. If I have a terrible laptop, people won't ask me to do interviews.
I don't know. CNN International seems to call all the time.
Is there a timeline or a goal for that? I know you were expecting some stability in 2026.
Originally, he said it was going to be in 2025, but then pushed that one back.
Yeah, I mean, we're seeing already, the market respond. Even as we were setting up already the implementation of sustainability, we started to see markets already coming back. Now you're really starting to see insurance companies, like you said, 5 already coming back.
Those were the 5 that weren't saying they were leaving anyway, and none of them were the insurers that make up over half the market.
I haven't even heard of any of the ones that you've mentioned.
Opening new lines, expanding in California. It all depends. These ongoing conversations.
It's almost like the insurers that are not writing new policies get a free pass to jack up the existing rates on everybody else without having to take on any additional risk.
And the politicians are, of course, happy because they can make the claim that they're improving the situation without having to show proof.
These ongoing conversations, different companies have different footprints, different types of businesses in the state. So, we're having.
This is as boilerplate of an answer as you can have to not say anything.
That's as much as he's capable of doing.
So, we're having these conversations now. The important thing is our sustainable insurance strategy is done. We're implementing it, and we're having these fruitful discussions with the company. So they recognize that.
You mean like when State Farm said, hey, we need an emergency rate hike, and you said, sure, we'll do the hearing later.
And didn't even show up to that hearing.
Fruitful discussions with the company. So they recognize that
Well, he was going to go to that hearing, but all the nice hotels in Oakland shut down. So where exactly were they going to put him up?
Well, he's a Hilton man. He doesn't want to stay at a Hyatt.
That we've done the hard work. We've made the tough decisions. And now,
Cliche.
and now we're entering these conversations and you're going to see more companies entering the state.
When's that going to happen?
Yeah, give us a list of the companies who tell you that they can't wait to come here.
When is the company that you authorized a 48% increase on rental property, State Farm, going to start writing new policies as they jacked up the rates on everybody? And that passes on to renters.
I told you the conversation I had with my longtime agent, didn't I?
Remind us.
Where I was thinking about getting a second property, a condo here in California, different county than where I live now. And I said, can I roll this into my policy? And they said, no, we're not writing new ones in California. And I said, no. I'm not a new customer. I'm an existing customer. I just want to add an additional property to an account that's already open. And they said, no, you can't do that. We're not taking any new properties in California, even for existing customers. And I said, well, when should I be able to add another property to my policy? And they said, we don't know, but we don't anticipate that happening anytime soon.
Well, Johnny, we're just getting started with this interview on KCRA3, Ashley Zavala's California Politics 360, where Ricardo Lara claims even though he has given the insurance companies everything they want and more to increase rates, don't worry, your rates are actually going to start coming down.
And here's our question to you at 800-222-5222, 1-800-222-5222. Do any of you believe that? Do any of you believe that insurance rates are actually going to start coming down in California? I don't. I have zero faith in any of these fools. What say you at 800-222-5222? 800-222-5222 is the telephone number. 1-800-222-5222. Gavin Newsom and California Insurance Commissioner Ricardo Lara both say that because of them and their excellent work, you're going to have more options, more companies where you can buy insurance policies from, and the rates, well, they're not going up anymore. They're going to start going down. Do you believe any of that? 800-222-5222 is the telephone number, 1-800-222-5222. And let's try to sneak one in real fast and go to Susan in Castro Valley. Susan, hello.
Hi. Yeah, I wanted to call and let you know I have State Farm, and while I had a big increase in February, 25%, I negotiated it back down to what it was before. And this time when I had to renew for the next 6 months for my car, it was slightly less than the last payment I made. And for the renter's insurance, it was abruptly the same for the next year.
Well, thank you for letting us know that you can negotiate these rates, and you were successful in doing so. That's at least a silver lining in the cloud. If you'd like to email the show, you can do so at johnnydon'tlikeshow@gmail.com. That's johnnydon'tlikeshow@gmail.com. And Randy, I can't tell you the number of people who told me that they listen to podcasts of this program when they exercise, because they know that the podcasts are going to be around the same length, so they can get on the exercise bike, or they can get on the treadmill, they can get on their elliptical machine, whatever the case may be, and they know that if they listen to one podcast, it's worth one workout, and you can do that too.
Forget sweating to the oldies. It's sweating to the John Phillips Show. Search for the John Phillips Show wherever you get your podcasts, whether it's the Apple Podcast app, iHeart, Spotify. Search for the John Phillips Show. Hit subscribe. You can download all the episodes. You can do a Google on the YouTube. Get the free KABC app. Get the free KSFO app. Get the free KMJ Now app. We're on that station Saturdays at 2. So many easy ways to listen live to our radio stations and download all the podcasts. And you, too, can be like Katie Porter on your exercise bike in the kitchen.
Paul! Let's go to Mike in L.A. Mike, hello.
Hi, John. Hi, Randy. Great topic. Very important topic. So I've, in the last year, I have 8 properties. I've canceled on all 8. 6 of them were farmers. And because the property was redeeded, they said, oh, no, that's new policy. So those were all canceled. And State Farm, 2 of them, I lived in my house. I moved out, went from owner-occupied to non-owner occupied, and then when I wanted to move back, they said, "Oh no, that's a new policy. We can't honor that." So in probably 25 years of coverage with both companies, 0 claims and all canceled in 1 year. So I've had to get out-of-state coverage for the farmers and fair plan for the 2 state farms, and that's what I'm stuck with. So I don't see the problem getting any better in the near future at all.
No, and it's par for the course. I think I mentioned it on the air once. My brother, who hasn't filed a claim in many moons, has been dropped 3 times in the last 4 years by his insurance companies. And he never misses a payment. He is a loyal customer, and it doesn't matter. They just want out.
No, it doesn't matter. And I actually, with State Farm, I had my car, my home, and an umbrella, and they canceled my homeowners and then said, "Oh, we can't sell you an umbrella because you don't have homeowners." And I said, "Well, you canceled it. I didn't cancel it. You canceled me. Sorry, you can't have it." So I've had to go out of state, the fair plan for my fire insurance, and then for liability and for my umbrella with an out-of-state company. And I asked my rep about the out-of-state insurance, and he said, "Well, it's not certified by the state." I said, "Well, what does that mean?" He says, "Well, if they have a catastrophic event, they can just file for bankruptcy." And I said, "Well, then I got faux insurance. I don't have insurance. I just have a piece of paper that says I do. But I don't have any faith that the out-of-state insurance companies, because they don't have to honor it, if it's another Pacific Palisades or Malibu, they're just going to say, 'Oh, we're bankrupt. We're going to file bankruptcy.'" So anybody talks to me about insurance, I'm like, "No, you don't really want to hear about it because it's such a disaster here. And it's not going to get any better. I just don't, unless they get this insurance commissioner out of the way and let the market dictate rates, let as many companies that want to come in, it's never going to get better."
I wish I could say you're wrong, but I can't because I agreed with everything you just said. Thank you for the call, sir. Let's go back to the insurance commissioner, Ricardo Lara.
This was an interview that aired on Sunday morning on the brand new statewide political show, California Politics 360, hosted by our friend Ashley Zavala.
Your department has noted the 5 companies that are prepared to stay in the state with those new rules, they're asking for a 6.9% increase.
So the companies that weren't leaving anyway that said, "Oh, we're staying, can we get a 6% increase?"
It's just a negotiation ploy.
The governor.
Well, and they all know that they've got Lara over a barrel, whether it's because he's inept or corrupt, that he will give them anything that they want. So, of course, they're going to ask for the moon and more.
And now that he's termed out, he has nothing to lose.
The governor mentioned earlier this week these new regulations will allow for, in his words, more rapid rate increases. Is that how you would characterize what could happen to insurance bills for Californians?
Oh, well, these rate
Wow, that microphone is bad.
Oh, well, these rate files are still going to have to be reviewed. Just they have to go through our transparent process.
I think he's on Windows 98.
He's probably better off if no one can understand him.
Well, we should be able to understand the statewide elected insurance commissioner, who we know what he makes, and if he's this cheap for a laptop, means he's spending all his money gallivanting around the world.
They need to be accurately, reviewed. They need to be, looked at by our attorneys, by our actuaries, to be determined if that is going to be the actual final rate.
Wait, but when State Farm asked for a massive emergency rate hike, you just gave it to them.
And people who were in that room when that hearing took place say that State Farm didn't actually make their case at all, that the outcome was predetermined.
Well, and there was an issue where the people that were representing Lara and the people that were representing the insurance companies had the same consultant for the case?
I believe so.
But what's different now is that these rates under our new system, unlike before, they have to commit to write and stay in the state and commit to writing where they once used to abandon and non-renew people. That is the new part of our strategy.
Well, the fine print says they have to write 5% more policies than they do in wildfire distress zones.
And here is also a key part of it. What's the enforcement mechanism? Are you relying on taking their word for it? Do they have to show some kind of proof? What are the consequences if they don't?
And it is the only agreement that exists in California and the first of its kind that no other state has. And that is the beauty about our reform, that they can no longer just abandon these communities. They have to commit to stay and grow in the state and go back into the communities that they once abandoned under the new rules.
But with the new rules and the new system, what will the California Department of Insurance do to protect consumers and to prevent private insurance from becoming unaffordable or from putting people in a situation where they're still relying on the FAIR Plan because it's so expensive?
Absolutely.
There's another one.
Shang?
Putting people in a situation where they're still relying on the FAIR Plan because it's so expensive.
Absolutely.
And this is
I timed that one. Great.
absolutely. And this is the other part of our sustainable insurance strategy. Hand in hand with these rate files,
You know what? Maybe I'm wrong. Maybe the problem isn't that he has a terrible computer. Maybe it's that he's doing this interview from underwater in a pool.
It's either that or in a men's room.
they also, the insurance companies not only commit to writing more in the wildfire distressed areas,
5%.
but they also at the same time have to depopulate the FAIR Plan.
FAIR Plan has only gone up this year.
Mind you, the last time he got what he wanted, he said the result would be that the FAIR Plan would be kicking people off because they would be going to insurance companies who would be coming back to the state. That hasn't happened. In fact, the number of people who have purchased policies from the FAIR Plan has gone up.
They have to get homes out of the FAIR Plan, offer them traditional insurance.
Isn't this the same guy that also gave the insurance companies that are responsible for the FAIR Plan the option to charge consumers from the rest of the state when the FAIR Plan goes belly up?
Bingo.
That is the agreement under our new rules. Because we don't want a growing FAIR Plan. We want those homes out of there as well. And then additionally...
And of course, the other thing that we found out about the FAIR Plan this year is the policies that were being written by the FAIR Plan were illegal because you have to cover smoke damage.
You talk to people whose homes burned down in the Pacific Palisades. The company that is the worst to deal with by far, we've heard this from everyone, was the FAIR Plan. Number 2 is State Farm.
Because we don't want a growing FAIR Plan. We want those homes out of there as well. And then additionally, for the first time, mitigation is going to also be reflected in the new rate files. So that's also going to be taken into consideration because I heard time and time again from consumers, I'm spending thousands of dollars and my rate is still going up. It's not being considered into...
Or the insurance company flew a drone over my house and they saw a leaf and they thought it was a broken roof.
Or they send you an email and they say, if you want to be renewed, you have to take pictures from every room in your house and every square inch of the perimeter of your house and your backyard too. And they're just looking for reasons to drop you.
It's not being considered into my bill. So that is also going to happen for the first time under these new rules. So not only are insurers committing to stay in California and grow, they can...
Except for the ones that make up over half the market.
Yeah, don't act like all insurance companies are equal. You have some that are big dogs, and you have some that represent just a handful of people. The big dogs are no longer selling policies in California. Allstate, State Farm, Farmers, you get the idea. But then you have these small companies, these fly-by-nights that no one has ever heard of, and they don't have the capacity that a State Farm has. So stop pretending like they do.
They can no longer abandon our communities that have been ravaged by wildfire, but mitigation is going to be taken into account now into the rate, and they have to depopulate the FAIR Plan. That is the unique part of our plan that never existed before, and that is unique to California. No other state has this agreement, and this is why we feel that we're going to see, the rates come down and stabilize.
How?
Again, the FAIR plan is not taking its people and giving them to companies. It's getting bigger. What you're saying is not happening.
I also just don't understand when you've created this structure where now rate hikes can be approved much quicker. They can get much more based on their modeling. How does that translate into lower rates?
It translates into higher rates.
And this is why we feel that we're going to see, the rates come down and stabilize. We're going to continue to see insurers come into California. And in the long term, we're going to see a rate stabilization for the long term in California and stabilize and get us finally out of this insurance crisis.
He said stabilized about 50 times there.
Yes, he did.
Insurance is what you oversee specifically, but I mean, on the topic of mitigation, I know that's one example, but could state lawmakers and the governor do more to help you get companies back and keep prices down in other ways?
They don't want to touch insurance with a 10-foot pole.
No, they don't.
Outside of what you oversee.
Absolutely. We've been.
We got another one.
Shangy.
Outside of what you oversee.
Absolutely.
We've been.
Oh, I did good on that one, too.
You're getting good at this.
Absolutely. We've been working this year, for example, on mitigation. So there's a bill right now sitting in the governor's office that will create the first ever mitigation grant program in the country.
We're going to give you money to get rid of all the trees in your yard. You got any bushes? They got to go too.
That would have been helpful before Palisades. How about before Altadena?
In the country for fire that will give money in people's, pocket to work on that wildfire mitigation that not only saves your life and saves your property, but brings the cost of insurance down. That is critical for us to make sure that we're working hand in hand with the legislature to create these programs to get money back in people's homes and in their hand so that they can do the work, so that work can be reflected in their insurance rate and bring that cost down of insurance. And guess what? It also keeps insurers writing in those communities. So it's all interconnected. Well, of course, we're going to continue to work with the governor. Hopefully he signs this bill, and we're going to continue to work with the legislature to provide more resources to work on mitigation that is key to bringing the cost down and keeping insurers writing in California.
He keeps saying mitigation because he knows there's no way that California is going to stop getting set on fire constantly every year.
How about this? If you're asking the insurance commissioner, what can we do to mitigate the risk of fire? Since we know that in the city of Los Angeles, the largest city in the state, half of all fires, according to the fire chief, half of all fires are started by homeless encampments. How about someone in the legislature coming up with legislation that says that homeless encampments that are allowed to stick around are fire hazards, and we are going to come down on these cities and counties that refuse to do anything about them like a ton of bricks. And we're going to withhold state funding, and we're going to punish them in any number of ways, and you're going to clean them up or else. And that's going to help beautify your neighborhoods. That is going to reduce the number of people living on the streets. And that is going to make it easier for people to buy insurance because you're going to cut down on half of the fire risk that they now experience. But no, that's not where his head goes to immediately.
All right, Mr. Insurance Commissioner, thank you so much for making time.
Thank you. Appreciate you.
Oh, I thought we'd get one more.
I thought so too.
Absolutely.
If you'd like to email the show, you can do so at johnnydon'tlikeshow@gmail.com. That's johnnydon'tlikeshow@gmail.com. And Randy, you're monitoring the mailbag.
Chuck writes in at johnnydon'tlikeshow@gmail.com. Hey, John and Randy, the insurance company's already got their deal from Lara. What's happening now is political cover for Gavin's run for president. If Ricardo Lara's IQ is over 100, I would be extremely surprised. Whenever he speaks, he sounds dumber than a mud fence.
I'm very kind of sketchy.
Let's go to Robert in Santa Clarita. Robert, hello.
How you guys doing? Yeah, he is running cover because, Gavin Newsom's gas taxes have got the CPI where it's at, your branch indexes on home ownership, getting insurance, running a business are going to stay where they're at. I mean, Dollar Tree is like $3.50 for like nothing now. You go to grocery outlet, the prices are high, and that means your bonded labor and material for projections for building rebuilding a house are going to be way up, and the insurance companies are just going to do their math. And they're kind of addicted to this, too, and they've been allowed to do it because they didn't even want to call out Gavin's cap and trade in gas taxes, which keeps the consumer price index, which you base everything off of, to project liability policies. And it's not going to go down. And they're complicit, too, because they're covering Gavin, too, because everything that's inflationary, Gavin makes, and he stands by it. And it's ruined everything, and we're stuck in it, and nothing's going down. And he's expropriating the money from the gas tax surplus, as one example. He's like a Maduro or a Hugo Chavez. He's just stealing money and commandeering buildings too. And he's behind all these hotels, $500 nights for homeless. I mean, everything Gavin does is a scam, and including this whole insurance thing with Laura, his little buddy. So good luck to us until things change, with the actual cost of things and the revaluing of the dollar and getting rid of all the fuel taxes. They create that and the other inflationary things. We're going to stay here.
All right. Thank you for the call, sir. And you're right. In a one-party state, one of the things that we've seen here in California is that business is afraid to take Gavin on, even when he's supporting policies that will harm them and harm their industries. Go back to the COVID-19 shutdowns. When California was locked down, Florida was not. Disney World in Orlando was able to operate. Disneyland in Anaheim was not. And instead of Bob Iger going to war with Gavin Newsom, he got passive-aggressive with him. Well, that's not good enough. If they're doing things to damage your business, you need to take them on. And so far, we haven't seen a whole lot of that.